Welcome back to the channel. Crypto Trend Trader here, and today we're going to be taking a look at Bitcoin. But before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So here we have the daily Bitcoin chart, and we're looking at the Coinbase exchange. And here you'll see I have our moving averages pulled up, and as you can see, we are consolidating currently below the 528. And as far as I'm concerned on the daily, as long as we're below that 528, we are below all major moving averages that I consider relevant in any markets on this time frame. And as long as we are below that 528, I'm extremely bearish. As you can see, when we came down and hit the 528 the first time, we got that massive rally, 40% basically in a 24-hour period. So us to come down below it and break below it and now be consolidating below the moving average is extremely bearish to me. As you can see too, 528 is something that I use. I've never seen anyone else using it, so if all of a sudden you see someone else using it, you can thank me for that because they definitely got it here. The 528 is perfect in cryptocurrency and Bitcoin markets. You will see specifically that it corresponds with the absolute top that we found here when we were looking to break through that resistance zone to exit the bear market after our initial push up. And then you'll notice as well that we did run into it multiple times and had a similar situation like this come down as well, where we basically found ourselves consolidating below the 528, popped up for a massive move. In this case, I believe it was very similar to 46% to the upside, after which we came back down, consolidated below it, got a weaker pop-up to the 200 moving average, and then got rejected. And then we did, in fact, capitulate about 2 months after that. And as you'll see, we came down to the 528. We got the initial bounce of 42%, which is almost exactly the same. And then that was immediately rejected, and we dumped back down. So what I would expect to happen before we capitulate, and again, this is not fact, it's not set in stone, it doesn't have to happen, but I think it's very likely that we would come up one more time and get rejected off of the 200 EMA at 84.50 right here, and that 200 is currently corresponding with the 89 as well. And you'll see we did get the death cross on the exponentials. We had already gotten the death cross on the simples. All our moving averages are now sloped to the downside, which is bearish. And finally, we have our 200. Basically, this is our longest relevant simple moving average that I take into account. And we have, in fact, lost the slope on the 200 as of the last couple days. It's not like a strong slope to the downside or anything yet, but as long as price action is below the moving average, it will start to move to the downside and continue to accelerate. So at this point in time, based on the daily time frame, market looks extremely bearish. Although I do still think that it's a possibility that we could get that pop up to 84.50. Switching over to the weekly chart, you'll see essentially we came down and based off of the 55 simple, and then got the push back up. Essentially, we're finding support currently on the 89, but getting rejected by the 50. So we're basically trapped between the 50s, and we're currently consolidating on top of the 89. It looks like we're getting ready to get the bullish cross to the upside. Typically, when you see this happen, there will be a massive move to the upside. It'll be either like a burst right before it, or as soon as it crosses over. But again, in heavy consolidation periods, signals like this are much less reliable. So you have to take them with a grain of salt. But it's not unrealistic. I mean, this was a similar situation where we got the cross right here. We get a nice push up, and we are trading at the bottom of the range, and we are on top of moving averages that we tested for the first time. So is it unrealistic to think, basically that we could get that pop up? I don't think it's unrealistic at this point in time to think that we could get a 15 or 20% move to the upside and essentially retest the 10 and 21 on the weekly, and we could get a strong rejection, but at least then we have tested them, because basically since we broke through them, we came back, tested, and closed above, we haven't technically come down and then got rejected. What I would expect to happen is us to come up and get the wick rejected and not get the close above it, because that's like, the different levels of rejection is essentially like, first level of rejection is we're rejecting prices lower than this moving average. Second level of rejection is we make it down below, but then we find support and then we close back above it, but then sell back off. And then the third level of rejection is essentially when you move up to a moving average and get rejected before you're able to even get a close above it and then sell back off. That's like the strongest form. And often the market will test all three forms like very, very methodically. So it's not uncommon to think, or it's not unrealistic to think that we may get that test back up, depending. These obviously are moving and sloping faster over time, but it's not really unrealistic to think we're going to get a test up at least to the 84.50 range. So I wouldn't exactly be jumping into shorts right now. If you don't get a good entry, it's smart to just sit on the sideline and wait for the entry. But again, that's not financial advice. I'm not your financial advisor there. So here we have basically long-term target to the downside is still going to be right around that 5,000 range, where I would expect us to hit the 200 moving averages. Although I don't think it's unrealistic that if we did get the sell-off, there's so much no man's land in between that we could get like a strong stab down below it and then either close below it, fake the market out, and then get the move back up, or sell off below it and then come back up. But again, I'm still bearish until I see something else otherwise. But I'm not exactly entering positions to the downside right now. I'm actually more likely to take a short or swing trade to the upside based on the technicals we just discussed. But the time frames are just so choppy right now. I just want to come back down to the 4 hour and essentially like bring this up. I'm hearing everybody talk about manipulation and this, that, and the other, and whales and liquidation hunts, and that's not always the case. Everybody always thinks it's like some huge conspiracy of everybody trying to get your money, and that's what this is all about. But essentially, like, it's a lot easier for people to just buy and the price to go up. So you think whales don't want to make money? Like, whales will make more money on the way up than they will on the way down. So in all reality, it's not whales manipulating the market. It's supply and demand, like any market. And right now, there's just not that much demand. Which is why the halvening is like this fabled unicorn that's going to like change the whole market and cause a swing. But it doesn't work like that, because the halvening is not creating additional demand, because the demand is not based on like any actual like use case as of now. It's a weird situation. Over time, yes, you could argue that Bitcoin's value will go up because of demand and the halvening and the supply is limited, et cetera, et cetera. But, that's a long-term thing that happens over like years and decades. It doesn't happen over like a couple months. All of a sudden, everybody's like, oh, I need so much more Bitcoin because halvening. Like, most people aren't miners, so it's honestly not that relevant, the mining reward. And it may affect the security of the network if miners turn off their machines, but when it's all said and done, the network adjusts, and it all kind of balances out. So anyway, regardless, we're basically right here. There's no conspiracy theory. We're in a range. This is the bottom of our range right here. The bottom of our range is $7,067. We got a stab outside the range, and then that was used as momentum to move the market back to the upside. When we got up here, we essentially failed. The rally failed, and we sold back off, and we sold back off to the bottom of the range. Right down here, $7,060. That's the bottom of our range. And then the top of the range, one might argue, when we got that wick back up and we shot all the way up here, one might argue that the top of the range is right here at 77.83.